Germany, the sleeping giant is waking up, bringing billions into play, and Indian companies are perfectly placed to cash in. Europe's economic powerhouse is ending years of fiscal conservatism to pour in billions into sectors like infrastructure, tech and green energy. And that's making India's corporate bigwigs grin hard. First, let's look at what happened at the German Bundesrat on March 21 and then circle back to why Indian companies are beaming. The German parliament has officially reformed the debt brake mechanism. The debt brake mechanism was stopping Germany from swiping its big, shiny credit card too often. Introduced in 2009 under Angela Merkel's government, it was meant to keep government borrowing in check, especially after the global financial crisis. Germany also had to follow certain EU rules on spending, thanks to the Maastricht Treaty of 1992. Under this rule, the German federal government could only borrow up to 0.35% of the country's total economic output each year, and individual states weren't allowed to take on debt at all. This made it one of the most strict countries in the G7 when it came to borrowing. But not everyone was a fan of the rule. Critics argued that the debt brake handcuffed the government, making it harder to spend on education and infra. Others believed it held Germany back from swiftly responding to a crisis. While the rule helped keep the debt low, it also sparked intense debate on whether it was too restrictive for a modern economy. Now, with the shackles lifted somewhat, Germany can borrow and spend more freely, unlocking billions for infrastructure, green energy and digital projects. This will help lower borrowing costs for businesses, fuel consumer demand and create massive opportunities for companies including Indian firms, and the impact is clearly visible. On March 19, when the Bundestag or Germany's parliament approved the key fiscal reforms, Indian defense stocks clearly felt the excitement. Marzgau dock surged 10% intraday, while Garden Ridge shipyard hit its 20% upper circuit. Cochin shipyard jumped 8.8%, HAL rose 4.4% and Bharat Dynamics gained 6%. The market reaction was clear. Germany's higher military budget could open new opportunities for Indian defense firms, driving strong investor confidence. And defense companies aren't the only ones cheering. With a 500 billion euro fund for infrastructure and climate projects, plus a sharp increase in defense spending, new doors are opening. Indian firms operating in Germany, think TCS, Infosys, L&T and Bharat Forge, are well positioned to gain from a surge in contracts and government-backed projects. Germany's fiscal shift isn't just about numbers on a balance sheet. It is quite squarely about the future of global business. And business columnists are having a field day analyzing this. As for Indian companies, when billions of euros flow into key sectors, they could have a rare chance to carve a bigger space in Europe's largest economy.
Hey, thank you for watching this on CNBC TV18. Hope you liked it. For more such interesting news and updates, follow CNBC TV18 on all the social media platforms.